Can the rebound of Bitcoin sustain? Should we go long now? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. After completing KYC and depositing $100, you will immediately receive a Bitcoin position worth $1,000. So what are the steps? First, click the link below. Then, complete KYC and deposit $100 to your account. You can choose whether to receive a long or short position, which will be set up for you directly, with a Bitcoin position worth $1,000. As long as the market moves in the direction you choose by 10%, your initial investment will double, with a deposit of just $100. Now, let's get back to the Bitcoin market. Let's examine the daily chart. Looking at the daily chart, it tempts me to draw a price channel. As you can see, there are two possible ways to draw the channel. Why do I say so? Let's see. The first one is like this. Why did I plot it this way? It's mainly due to the upper side. As you can see, there have been continuous contact points at the upper boundary, and there are also contact points at the lower boundary. So, perhaps this could be a good way to draw it. But I think the most effective and valuable way to draw it, for better reference, is this. Let's make a slight adjustment. It should be like this. It means that we should pay attention to the lower trend line, connecting this touch point, the middle touch point, and the upcoming touch point. This location is also crucial. Why? Because it was a resistance level in the previous period. It's an S/or reversal, and it's close to the trend line. If the price breaks below this level after hitting it, I believe there will be a significant downward movement. What is it so? Let's check it out. Channels like this can indeed indicate a bullish trend in one wave. Well, let's look at the previous position. At this position, if we draw a channel, we can see several touch points along the lower boundary. On the upper boundary, we can observe the middle touch point and the uppermost touch point. So, this channel follows a very typical and perfect pattern. When it broke below the channel, it marked the beginning of a bear market. Once it broke through the channel, wow! The price moved downward very quickly, before breaking below. I reckon that it was a good time to exit spot positions here. If we waited to exit spot positions at a lower level, it could have resulted in significant losses. Alright. Now, well, when we are examining the trend, how do we know whether there is a bullish trend? There are various methods, but trend lines are indispensable and a very intuitive way of judging. As long as the trend line holds, the trend is still intact. However, even though the trend line has not been broken, if we look at other aspects, the current bullish trend has already ended. What is it so? Let's consider moving averages. The MAs are, undoubtedly, in a bearish formation. It's already a bearish formation, which is a very bearish signal. I even think that opening a short position from this level and holding a daily level short position could be quite profitable. Of course, a more conservative approach would be to at least take profit on spot positions that we've been holding from the bottom and exit first. Alternatively, we can close any long positions. Otherwise, after the consolidation phase, if a downtrend truly begins, it might be too late to react. Now, let's look at the current market changes. You can observe that it's making lower highs and lower lows. This clearly indicates a bearish situation. So, actually, if we look at the moving averages and the highs and lows, they all indicate a bearish trend. Apart from the trend line, which is still above the current price, if the price breaks below it, the current bullish trend will be completely invalidated with no chance of recovery. Now, let's consider the possibility of going long in the current market conditions. Based on the current situation, I wouldn't consider going long unless there's a breakout above the trend line. I am currently not considering any long positions, holding spot positions, holding long positions, or having any plans to go long. However, you may notice that if we had a bullish trend, the trend line would definitely be broken, indicating the end of consolidation. Until that happens, we should wait. Additionally, in the 4-hour time frame, considering the recent market changes, which happened the day before yesterday, what did you notice? Let's bring the candlestick chart to the center. You'll notice that there are several supports at certain levels. These points. This one, too. Am I right? After breaking below, the price returned to the level again. Also, if we zoom in further to the 1-hour time frame, you can see that previously this level acted as resistance. Hold on. Let's make it clearer. The price got supported here. The line turned into resistance after the price broke through it. And we got a significant volume breakout. The price turned into support again and continued rising after testing the support. The market movement has been relatively subdued during the weekend. However, when this particular candlestick has formed, if we initiated a short position based on this downside breakout, we should not hold that short position once the price stabilizes above the line with this huge volume, because the reason behind holding the short position has already gone. Now, let's go back to the 4-hour time frame. As discussed earlier, the current market conditions do not necessarily warrant a long or short position. What does it mean? This means that just because it's not an opportune moment for a short trade doesn't automatically make it suitable for a long trade. What does it mean? The price has returned above the line. Going short isn't advisable. But does it mean it's a good time to go long? I don't believe so. To have a strong bullish trend, we would need to see a smooth and swift upward movement from the beginning, accompanied by high volume and long candlesticks, especially their real bodies. However, do we see such conditions at the moment? Unfortunately, no. Where did we see these conditions then? We observed them in a previous instance. Let's see. Now, let's zoom in and analyze this time frame more closely. Even on the 4-hour chart, we can witness all these favorable conditions mentioned earlier. There was a small pullback, almost negligible, with long candlesticks and high volume. We can get all the characteristics here. This was an excellent entry point for long positions in the spot market or other related instruments. However, in the current market scenario, it may be a bottom reversal. It may be. But personally, I don't see it as an opportunity to go long. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.